Okay, so welcome to Succession Retirement Planning, What to Do with Your Premises. My name's Will Ellis. I'm one of the directors at BW Healthcare Surveyors, and we'll be going through the presentation with you. Before we start, I would just like to thank Kernow LMC for putting this on and getting it all organised on our behalf. So thank you ever so much for that. Right, okay, so without further ado, hopefully you can all see the screen. If you do have any issues with seeing the screen or hearing me, if you just want to pop it in the chat, then we'll see if these issues can be resolved. And equally, at the end of the presentation, so this presentation will probably take somewhere between maybe 25, 30 minutes, depending on how quickly we race through it. But if there are any questions, there will be a Q&A, a question and answer at the end. So if you have any queries, if you want to pop the queries in the chat box at the top. So if anything springs to mind, you want anything explaining or want something discussing in a bit more detail, pop it in the chat box and we can cover that at the end. But equally, if you want to wait till the end, we can have an open Q&A as well. Okay, so the presentation itself, so the content. So what we're going to be talking about is what to do with your premises when you're contemplating succession and retirement. What to do with your premises, what the options are. So sale and lease back, what the pros and cons are of sale and lease back, putting a lease in place as an alternative. So we'll be talking about those two matters. Transferring the NHS contract to another entity. So we'll be talking about what that is and how that works. And then also how to maximise the value of your premises. So in anticipation of perhaps selling the surgery, we'll talk about the steps you can take to enhance the value of the premises. And then, like I said, there'll be a Q&A at the end. Okay, so what to do with your premises. So you have several options when deciding what to do with your premises. So the first option, as I'm sure everybody is looking at the moment, everyone contemplates upon retirement or prior to retirement, is trying to search and find new partners. There's obviously not a vast amount of GP partners out there, unfortunately, or GPs willing to become GP partners, but there are a lot of practices who delve down alternative routes. So things like perhaps non-clinical management partners, or you've got nurse partners, pharmacy partners. And there are also ways to promote or to persuade, I suppose, partners to come in. So one of the biggest stumbling blocks for GP partners, as I'm sure you're all aware, is finding funds to buy into practices. So again, there are some practices are finding flexible ways to get around this. So one of the ways is a gradual increase into full equity. So rather than the partner having to buy in all in one go, so buying in 25%, for example, of the premises, that payment can be split over a payment term. So perhaps split over 5 years. So rather than paying 25% all in one go, they could pay 5% over the 5 years until they reach the required level. There's also the option of a reduced cost buy-in. So rather than a partner buying in at full equity value, they can perhaps buy in at 80%, with that 20% seen as almost like a golden hello, so a discounted rate. So there are flexible ways of finding partners, and that is always the first option. Failing that, so other solutions, and these are the things that we're going to be talking about today. So sale and lease back, so where an external investor will come in and look at purchasing the premises. You, as the GP practice, will still hold the contract, still run the surgery. You'll just have a lease in place now. So rather than being owner occupied, you'll have a lease in place and you'll pay rent to a landlord. Or alternatively to that, you could look at putting a lease in place between yourselves. So we'll go through that in detail as well. But ultimately, rather than selling the surgery, upon retirement, the retiring GPs could become the landlords with the existing GPs as their tenant. So that is another option as well. Other options are around merging with another local practice. So perhaps, again, when it comes to retirement, you could look at merging with a larger practice with a younger set of GPs potentially, and they could come in and take over the premises. They could also look at potentially purchasing the site as well, or you could put a lease in place with you as a landlord and the new practice as the tenant. So that is certainly an option as well. And then you've got transferring the contracts to another entity. So upon retirement, if, for instance, you are a single-handed GP, or there's 2 or 3 GPs in the partnership and you're all retiring at around the same time, Obviously, we want to try and look at keeping the premises open, keeping the practice running. So you could look at alternative options in terms of transferring the contract to other entities. If you've already explored the possibility of finding new partners and not got anywhere, then there are options around transferring the contracts to other entities, third parties, NHS organisations and things like that. So we'll run through what those options are and how that will look as well as part of the presentation. And then the last one is closing the surgery and selling the premises. So we're not going to talk about this too much. It's obviously not what we want to see. Obviously, the closure of the practice should be seen as a last resort. And if that is even a consideration, then you really need to be seeking advice from the ICB or other organisations, other surveyors, solicitors, accountants, to try and find a feasible way to avoid that option. And obviously, some of the options that we're going to talk about today in terms of sale and lease back, putting a lease in place, merging with another practice, are certainly feasible options, so you can try and avoid that last resort. Okay, so of those options, we're really going to be concentrating on sale and lease back and putting a lease in place, talking about how that process works now. And we'll also delve a little bit deeper into transferring the contract to another entity. Okay, so sale and lease back. What are the benefits of going through a sale and lease back? So what are the benefits of selling the surgery to an external investor? First of all, the first thing you need to be aware of is the lease rent will get fully reimbursed by the NHS. So this is one of the first questions certainly we get asked when we take practices through the process, is whether their rent is going to get fully reimbursed by the NHS. And the answer is absolutely. So whatever the rent you receive, whatever the notional rent you currently receive from the NHS, if you went through a sale and leaseback, that is effectively going to be the rent that you pay the landlord. If the landlord, for instance, was to increase the rent, perhaps every rent review, you should have a rent review every 3 years. If they were to increase the rent, then that is only on the proviso that the NHS will fully reimburse you up to that level. So for the duration of your lease, whatever the rent you pay the landlord should be getting reimbursed by the NHS. That is on the assumption that you have the necessary protections in your lease to help support you with that. So it is very important that you get external advice and representation to assist you through the process, to make sure as tenants you are protected. And there are clauses in the lease that say something along the lines of the lease rent that you pay the landlord will get fully reimbursed, will not exceed the rent that you are receiving in reimbursement from the NHS. So that's the first point. The second point, so it can reduce the perceived risk and responsibilities of property ownership. So under a traditional lease, you'll have two options. So it can either be on an FRI lease, which is a full repair and insurance lease, which would effectively mean as tenants, you will be responsible for all of the internal and external repair and maintenance of the premises. But what that also means is you can retain a proportion of the rent that you receive from the NHS. So rather than paying it in full to the landlord, as just discussed, you can actually retain somewhere between 5 and 7.5% of the rent. And the idea is you put that retention into a sinking fund and you use that money to fund the external repairs and maintenance of the premises, which should normally be the landlord's responsibility. So that's an FRI lease. The alternative is a TRI lease, so a tenant's internal repair. So you'll only be responsible for the internal repair and maintenance of the premises, and the landlord will be responsible for the external repair and maintenance of the premises. If that's the case, then it's a straightforward rent in, rent out scenario. So 100% of the rent you receive is paid to the landlord. So you'll have two options really. Either A, you don't have to worry about the external repair and maintenance of the premises because that's going to be the landlord's responsibility now. Or B, you will still be responsible for all internal repair and maintenance, but you can have and retain some funds to hopefully cover the costs of any repairs and maintenance that is needed. Number 3, so it's going to remove the burden of ongoing capital investment. So because it's not your practice anymore, you'll no longer be responsible for any changes, improvements, or extensions of the premises because it's the landlord's premises. It'll be them that have to fund and organise those changes. Number 5, so being in a leasehold premises, when you go through a sale and leaseback, it can help attract new GP partners. So the idea is, as I've discussed previously, it can be very difficult finding partners having to buy in to the premises. Either A, they can't find the funds to do so because it's too expensive. Quite often it's hundreds of thousands of pounds for a 10, 15, 20% share in the premises. So they either can't find the funds, or if they can find the funds, they're just not interested in doing it. They don't want to take on that liability. When you're in a leasehold premises, it's a little bit different because there's no money that exchanges hands. The incoming GP partner or the incoming partner, whatever sort of partner that may be, just has to be a signatory on the lease. So it's a far more straightforward process, and it can be a little bit more attractive to GP partners and partners in general. It's not a magic wand, so there certainly aren't thousands of GP partners and partners just waiting to become and be signatories on a lease, but it just is just a little bit more attractive from what we understand when speaking to thousands of leasehold and owner occupied premises. Okay, so number 5. So having a lease in place will generally create a higher premium value of the property as well. So if you were to go through a sale and leaseback, the value of the premises is likely to be higher than perhaps it has been previously when you've had partnership changes. If you've ever had a partnership change, or if you undertook a partnership change today, for example, and you had a valuation for that, there'll be a little bit of a premium added on when you go through a sale and leaseback. And the main reason for that is because there is a lease in place. So if there's a 15-year lease, effectively, it's securing that rental income for 15 years. So it's seen as a very, very safe investment. So the incoming investors will pay a little bit of a premium with that signed lease in place. And so to bear that in mind as well, when you go through a sale and leaseback, the longer the lease you can sign up for, the higher the value of the premises will be. So it's worth considering as well. If you only want to sign up to a 10-year lease, if you can stretch that to a 15-year lease, then it's going to have an effect on the value of the premises. It's not the only thing that matters when it comes to valuing primary care premises. The notional rent is going to be a big factor as well, but certainly the length of the lease is something to consider. Number 6, so it can assist with improvement works, extensions, or even new developments of GP premises. So I would say this is one of the big reasons why practices go through a sale and leaseback, is perhaps because they're in need of improvements, or they're running out of space, which everyone seems to be doing at the moment, running out of space, needing space to house additional staff, our staff, for example. But they can't fund the extension or the improvement works themselves. They've tried to get external funding from the NHS, but it's just not available. So getting in funding from an external investor can be a solution to that, because they can come in, pay for the improvement works or the extension, or even potentially assist you with redeveloping a new site as well. And that can all be written into part of the agreement. So they'll purchase your existing site and then look at extending and improving as part of that agreement. So certainly something to consider there. And then number 7, so in most cases, the tenant will have protected rights for a new lease upon expiry of the existing lease. So what this means is if you sign, let's say you sign up to a 15-year lease, upon expiry of that initial term, you'll have an automatic right to renew the lease under the same terms, so for another 15 years. So it has to be under the identical terms, but you will have an automatic right to renew that. It basically stops the landlord from being able to sign you up to a 15-year lease and then just kick you out and get another tenant in. You'll have some protection there. Okay, so they're the kind of main upsides, some of the reasons why practices perhaps decide to go through a sale and leaseback process. Some of the downsides, or certainly some of the things you're going to need to consider before you go through the process. So leases can restrict what tenants do to the surgery. So as I've explained, because it's not your premises anymore, if you did want to make any improvements, changes or extensions to the premises, you're going to have to ask the landlord's permission before you do that. There may also be you may also have specific obligations on the practice. So perhaps there'll be a clause in the lease that asks you to redecorate the surgery every 3 to 5 years. There'll certainly be a clause in the lease that says you have to keep the surgery in its current state of repair. So whatever the state of repair is on day 1 of the lease has to be the state of repair at the end of the lease. And if it isn't, then there can be some financial penalties effectively to bring the surgery back up to its original estate. So that's worth bearing in mind. And there will be liabilities under the lease as well, including rental payment. So one of the issues with being a signatory on the lease is you will be personally liable for the terms of the lease. So if you sign up to a 15-year lease and perhaps after 10 years the surgery is no longer there, all the partners have left, and you have to hand back the contract, You as individual signatories on the lease will be responsible for the term of the lease, including the rental payments. So it's very important that you consider the length of the lease that you sign. Yes, there is a significant benefit to signing a long-term lease because of the capital value impact and the increase in value of the premises. But on the flip side of that, there's obviously longer liabilities for you as individuals. So if you think it's unlikely for the surgery to perhaps be there in 15 years, you might want to consider signing a shorter term lease, or you might want to consider even putting break clauses in there that will allow you to leave and exit the lease without penalty. Obviously, these things will have a detrimental effect on the value of the premises, so it's weighing up the risks and the liabilities against the benefits of the capital value, and that's obviously a discussion you'll have to have internally. Number 4, so you may have early redemption penalties on your mortgage as well to pay. So if you've got an outstanding mortgage, when you sell the surgery, you're going to have to pay off the mortgage, and the banks may charge you an early redemption penalty, effectively a penalty for the loss of interest that they're going to have over the remaining term of the lease. So the longer you have left to run on your mortgage, the higher that early redemption penalty will likely be. So just worthwhile speaking to the mortgage provider, just picking up the phone and just finding out what that figure potentially is, so you're aware before you go through the process. Number 5, so you must have at least 2 signatories on the lease at all times. So the majority of investors, I wouldn't say all investors, but I'd say a large majority of investors will require at least 2 signatories on the lease. So if you're a single-handed practice, you're probably going to have to look at perhaps finding somebody else to be signatory on the lease alongside yourself, either a new partner coming in, so there's 2 GP partners or 2 partners on that lease, or perhaps look at an external organisation and transferring the contract to another entity who will also be signatories on the lease. And we can talk about that in a moment or two. And if you've got, let's say you've got 4 or 5 partners. So you've got 4 or 5 partners. We'll go with 5. You've got 5 partners signing up to the lease in the first instance. Technically, the first 3 of those partners can leave and exit the lease without having to find anybody to replace them on the lease. When it comes down to that last 2, that's when you're going to face difficulties. And that second to last person that leaves is going to have to find somebody to replace them on the lease. Otherwise, they're going to remain liable for the terms of the lease effectively. So rather than the last man standing issue in owner-occupied premises, in leasehold, it's still an issue, but it's almost like the last 2 people standing rather than the last one, as it is at the moment. And then finally, number 6, so there will be possible tax implications as well. So again, it's worthwhile getting specialist accountancy advice, ideally from a primary care specialist. There are plenty of accountants with primary care expertise out there. So just finding out what the potential tax implications are of not just selling the surgery, but putting a lease in place as well. So things like stamp duty, land tax, or capital gains tax are things to consider when you go through that process. But again, just get the advice from a specialist accountant. They'll be able to advise on all those sorts of things. In terms of the process, so if you did want to go through a sale and leaseback, the first thing that would happen is a specialist surveyor would come out and give you an idea of what the surgery is worth on the open market. They'd then look at agreeing and drafting all the heads of terms, so the specific lease terms that you're going to be willing to sign up to, so the length of the lease, what perhaps repair obligations you might want, if you did want to put any break clauses in there. So they get all that lease drafted, and then that lease needs to go to the NHS for approval. So before anything happens, before you go through any process in terms of marketing and agreeing anything with the landlord, any lease will have to be approved by the NHS. And they'll check all the details, make sure they're happy with it, either rubber stamp it or suggest amendment, and we'll have to go back to the drawing board and draft other terms to make sure the NHS are happy. But ultimately, once you've got their approval, it's a case of going to market and negotiating with any interested parties from that point of view. Okay, so that's the main points on sale and leaseback. Another alternative option, as I mentioned at the start, rather than going through a sale and leaseback and selling the surgery to an external investor, perhaps you as partners, you're retiring, but you're wanting to keep the asset, you're wanting to keep the surgery, keep owning the surgery. Rather than selling it on, you can just put a lease in place. So you could put a lease in place with you as the retiring partner, as the landlord, and perhaps 4 or 5 other existing partners as a landlord as well. So there's 5 of you as landlords, 1 retired partner, 4 existing partners. and those 5 would lease it to just the 4 existing partners. So there'd be similar entities on both sides, but you'd put a lease in place between the 2. It doesn't always have to be a lease, so you can, under certain circumstances, it might be more beneficial to just alter your partnership agreement, and that might be worth speaking to a solicitor, getting some legal advice on which one is better suited to your individual circumstances. But for the sake of this presentation, we'll assume that we're going to be putting a lease in place under that scenario. So there are a couple of things to think about, or certainly some reasons why you might look to put a lease in place. So the first one is if you have 1 or more GP partners who aren't equity owners. So again, if 1 or 2 partners have retired, they no longer own the premises, then you're going to need to think about putting a lease in place. A partner in a multi-partner practice retires and leaves but wants to retain an asset, as we've just discussed. If you're a single-handed partner nearing retirement, but you look at transferring the contract to another entity, you can keep the asset, put a lease in place with the new contract holder as the tenants. And again, equally for the same reason, if all of the majority of GP partners decide to leave and retire the practice, ultimately, if there's a difference between, if you've got 5 partners and there's even just one partner that retires and doesn't work in the premises, then you need to be thinking about putting a lease in place potentially. In terms of the process, so it would involve negotiating and agreeing the heads of terms, the main terms for new lease, as we just discussed, and we'll go into a bit more detail on what those terms might be and things to look out for in a moment. So you need to put that in place between the parties, and then seeking approval from the NHS. So a relatively straightforward process, if not a time-consuming one, but it's certainly relatively straightforward. Okay, so some of the things to consider, some of the clauses that you might want to consider when you put a lease in place, some of the health warnings, as it says here, for both tenants and landlords. So the first thing to consider when you're putting a lease in place, either for a sale and lease back or a lease in place between the connected parties from the GP partnership, is the main thing is to make sure you use an NHS GP surgery lease, so a specialist primary care lease. It is very, very important because unlike a standard commercial lease, which is between a landlord and tenant as 2 entities, in primary care you have a 3rd entity that will be involved in the process, and that is the NHS. So the NHS, like I said, will need to approve the lease. They organise the reimbursement under the lease rent. So it is very, very important that is all documented within the lease, and it's documented what the NHS's role and what the mechanism is for the rents and things. So very, very important that you use a GP surgery lease. As I've explained a few times, that lease will require approval from the NHS. That's via the district valuer. So the district valuer will do what we call a value for money report to make sure it's effectively value for money for the NHS. The rent that they're agreeing to pay for the term of the lease, make sure it's value for money, and then they'll approve it or not. The lease also should be on an arm's length lease. So when you talk about connected parties, the option when we're talking about you've got 5 partners, 1 leaves, so you've got one retired partner who no longer it holds the contract. It's important that lease is on an arm's length lease, so you avoid the temptation of perhaps putting favourable terms in place, because you all know each other, you're all colleagues, hopefully you're all friends, and it can be very tempting sometimes to just throw a lease together without thinking about it, or perhaps looking at putting favourable terms in there. So maybe allowing the tenant to leave every 12, a break clause which will allow them to leave every 12 months. But it's important you try and avoid these clauses, because as tempting as it may be for the parties, it can have a serious detrimental effect on the value of the premises. So it's important that you consider that as well. You might not be interested in selling it right now, but if you put a 15-year lease in place with favourable tenant clauses, if you ever did decide to come to sell it, then it's unlikely that any investor is going to be interested in signing a lease that has favourable tenant clauses. So it's just important that you get specialist advice to make sure that, yes, both parties are happy with everything that they're signing up for, but also you look at the long term in terms of its investment value if you were ever to look at selling the surgery as well. Number 4, so you need to clearly state the landlord's and tenant's responsibilities. So again, who's going to be responsible for what? Make sure it's fully documented in the lease, just to avoid any potential disputes further down the line. You also, when you're putting a lease in place, will need to check the conditions of any mortgage. So this isn't to do with a sale and lease back. When you're putting the lease in place between the 2 connected parties, if you've got a mortgage in place. Some mortgages won't allow you to become leasehold premises. They will insist on it remaining as owner occupied, and they can put restrictions and conditions in the mortgage to that effect. So again, just make sure you're speaking to the mortgage provider and making sure, or reading the agreement to ensure there are no conditions or restrictions in there. And then again, there are also potential tax implications for putting a lease in place as well. So again, it's very important to get specialist accountancy advice, ideally from a primary care expert. And again, things like capital gains tax are things to consider, but they'll certainly, a specialist accountant will certainly be able to assist you and talk you through the process. Okay, a couple more slides very quickly. Transferring the contract to another entity, as I've explained very briefly. So this is a great option for failing or struggling surgeries, or those who might be facing closure due to retirement of their GPs. So if you've explored the other options, perhaps explored trying to find a partner in, and you can't find a partner to come in and be a signatory on the lease and hold the contract effectively, there are other options out there for you. So things like PCN and GP federations, they can both hold contracts now, so they can hold the contract and they can be signatories on the lease as well. You can look at local practices via a practice merger. So as I explained at the start, you could merge with a larger practice who could come in and take over the contract and run the practice on your behalf. You can either maintain, remain and keep ownership of the premises and put a lease in place, or you could look at negotiating the sale of the premises alongside the contract. Third-party organisations. So if you've explored perhaps a local practice or a PCN, you could look at third-party organisations. So there are plenty of third-party organisations out there now. So it's just certainly worth looking at third-party organisations who, again, will just simply come in, take over the contract, potentially look at purchasing the premises as well. So it can be a brilliant option. Employee-owned trusts. So rather than a GP partnership model, this is a relatively new scheme. So there is a practice that I'm aware of that currently have an employee-owned trust. So similar to how John Lewis works, if you're aware of that, where every member of staff owns a certain amount of shares in the organisation. So rather than it being owned just by a handful of GP partners, for example, it'd be owned by everybody. So all the reception staff, admin staff will be allowed shares in the organisation, in the trust, effectively. So rather than just being a GP partnership, it's an employee-owned trust. And then you've got the NHS Foundation Trust as well. So under certain circumstances, the NHS may look at taking over the contract and being leaseholders as well. So certainly plenty of options and things to think about. Okay, last one, how to maximise the value of your premises. So perhaps in anticipation of selling the surgery, it's very important that you put things in place to ensure you're maximising the value of the premises. The first way to do that is to check your notional rent. Make sure your notional rent is correct and in line with the current market. It's reviewed every 3 years. You should probably be having it checked independently every 3 years anyway, but it's certainly extremely important to do that prior to sale to make sure that the increase in notional rent maximises the value of the premises. You also need to look at ensuring any lease agreements or rental amounts are up to date. So if you lease any part of the building, the premises out to a pharmacy, for example, or a dentist, whoever that may be, just making sure that A, they've got leases in place, B, that those leases aren't nearly due to retire, and then C, just make sure those rental amounts are up to date as well. Any outstanding rent reviews have been undertaken. Make sure that rent is increased to as much as possible and the length of the lease is as long as possible as well. Next one is to make the most of any spare space or non-reimbursable areas. I appreciate nobody seems to have any spare space, but if you seem to magic some from somewhere, then it's just important to make sure that you're making the most of it. So if you don't need it yourselves as a surgery, then you could look at renting it out to one of the alternative providers that I've just mentioned. Or you could look at, if you are using it, but you're not getting reimbursed, then you could apply for approval for that space from the NHS to make sure that you get notional rent moving forward for that space that isn't currently being reimbursed. And then the last point is in terms of upgrading and improving, or even perhaps extending the surgery. So any upgrades and improvements you make should increase the value of the notional rent, which will have a knock-on effect to the value of the premises. And equally, extensions as well. Any extensions you build and improvements you make will increase the notional rent. It's very, very important when you build extensions, just as a side point, that you do seek approval for reimbursements. What a lot of practices make the mistake of is they get approval to build an extension, or they get approval for additional space, and make sure they are able to use that space for GMS purposes. The NHS say, yeah, that's absolutely fine, you can use the space. What practices forget is they also have to get approval for reimbursement. So just because the NHS have approved the use of that space doesn't necessarily mean they have approved the reimbursement of notional rent. So it's very, very important that you don't not just seek approval to use the space, but you seek approval for notional rent as well. So ultimately, all these things in terms of maximizing the value of the premises are to do with increasing the rental income for the premises. So even £1,000 increase in rental income can increase the value of the premises by 10, 15, sometimes even £20,000. So it can make a huge difference to the value of the premises in the long term. And that is just about it, to be honest with you. So ultimately, whatever decision that you make, it is really, really important that you seek advice from specialist surveyors, accountants, solicitors. There's plenty of free advice that you can get out there. So just pick up the phone if you've got a surveyor, pick up the phone to surveyors or accountants or solicitors. If you don't know any specialist, we are a specialist surveyors, but we also know specialist accountants and solicitors as well. So we can certainly recommend you to whatever advice it is you require. If you don't know where to look, by all means, give me a call on this number, drop me an email. More than happy to provide. If we can't help, what we tend to say is if we can't help you, we'll certainly know somebody who can. We'll certainly be able to point you in the right direction. Okay, I hope that was all okay. I hope you found that useful. You've managed to find bits and bobs that were useful to your particular circumstances. I think we have a question here. So what happens if you sign a lease but are unable to sustain running of the practice whilst in the duration of the lease? So as I kind of explained, if you sign up to a long-term lease and you can't continue to run the practice and you have to exit the lease early, effectively you are going to be still liable for the terms of the lease. So you will still have to effectively pay yourselves out of the lease. Now, you do have some sort of protection from the NHS. So it might depend on the reason why the practice was to close or that it stops running. If it's through consultation and agreement with the NHS, there may be some certain circumstances that the NHS will actually buy you out of the lease effectively, because they have approved the lease. They have given an undertaking that they are agreeing effectively to pay the rent for the duration of the lease. So it's probably worth having a conversation with the NHS at that point. And there's no definitive answer, unfortunately. You know, if you signed a 15-year lease and you couldn't match that 15 years, you were to leave after 10 years, for example, it's going to be a lot of effort to try and resolve that issue. It's probably going to be a legal battle between parties to try and get out of that lease. Whether the NHS make it easy and agree to pay is obviously something that they will have to decide, and it's at their discretion effectively. But that might be worthwhile having a conversation with solicitors and finding out. But yeah, there is the risk, and that is the main risk of signing up to a long-term lease. The benefits are obviously the increase in the value of the premises, but the risks certainly are you're effectively agreeing to pay that rent for the term of the lease. So if you can't, then it's going to face issues. What some practices do, and what I briefly touched on earlier, is you can insert break clauses in the lease. So if you are worried that perhaps you can't sign, you know, if you sign up to a 15-year lease, you might not be there for 15 years. You can insert break clauses. So you can put a break clause in there for perhaps every 3 years, where you'll have a 2-week window or a 3-month window that will allow you to break the lease for whatever reason. And you can also write in specific break clauses in there as well. So rather than being open-ended that says you can just leave for whatever reason, you can have a specific break clause that says if the practice no longer operates, then you can exit the lease. But again, the issue with that is it's going to have a detrimental effect on the value of the premises. So it's just weighing up the risk and the reward before you go through the process. Okay, I'll give it another 30 seconds or so to see if there are any other questions or queries. But look, if there aren't any other questions or queries, my contact details there. If there's anything that you think of further down the line, if there's a scenario, a particular scenario to your exact surgery, and you just want to have a chat, have a conversation, find out a bit more information about your particular circumstances, just give me a call or drop me an email after this. More than happy to put some time aside, and we can perhaps talk about the process in more detail in your particular circumstances. So I'm available all the time on email. So email me at any point, whether that be tomorrow or in 2 years' time. I'm more than happy to have a conversation with anyone who's even contemplating what we've discussed today. Okay, so yeah, look, thanks all. It looks like everyone seems to be okay with all that. Hopefully, I've given you some food for thought. I will leave you all to your very, very busy schedules. Once again, I'd like to thank Kernow LMC for organising it all and putting this all on. It's really appreciated. Hopefully, we'll try and put something together later on in the year to resolve some of the other issues and talk about other matters. But yeah, have a great day all. Have a great weekend, and we'll hopefully speak to some of you very, very soon. Thank you. Take care.